Morning, everyone. It's the 16th of March. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate. All right.
Yeah, not bad. You?
Yeah, not too bad.
Good.
Too bad.
Okay, let's get on with it straight away today then. So, unless you want to talk about Liverpool's win, now they're back to winning ways, so we can talk about them now, can't we?
No, I watched it. I won't get carried away with that, mate. It was pretty
Okay,
poor.
fair enough. Okay, so front and centre is vaccine concerns. We've got a list of European countries suspending the AstraZeneca vaccine as a precautionary measure amid worries about its potential blood clotting side effects, and that worry seems to be growing. Quite a bit of a blow to the already faltering vaccination rollout in Europe. Germany and France have both halted the shot. And that's despite European regulators reiterating its support for the vaccine, and we have Boris Johnson on the wires as well, stating his support for the vaccine and saying there's absolutely nothing to worry about. And of course, we've had AstraZeneca say that there's absolutely no evidence to support that either. So a little bit of a concern, I suppose, and I understand the worry, but it seems like the UK are pushing on. And looking at AstraZeneca's share price today, things look quite rosy on that front as well. They're up a couple of percent, I think, last time I checked.
Yeah. So, who is sort of like highlighting these concerns then?
Not sure. I think there may have been a side effect. I don't know if it was a coincidence or what, but the share price is up 2.75% today for AstraZeneca.
So it's shrugging it off.
Very much so.
Yeah. I mean, we all sort of like talked about this. Rushing the vaccine through, not enough testing done. Things like this. It's a concern, but you need to sort of like understand who's bringing these concerns forward and are they valid. It's with everyone in there who has it in their interest for it not to be a concern is saying it's not a concern, but how much do you trust those people?
Yeah, that's it. It's a difficult one, isn't it?
Politicians, pharmaceutical companies. I mean, you'd like to think you'd trust the World Health Organization, but I'm sure they have an agenda of some sort.
Well, they're all trying to get the economies back going, aren't they? After being battered for the last year, I think today marks a year almost since the UK sort of bundled into a lockdown. It was the Cheltenham Festival, wasn't it, where they had thousands of people all mixing together, and that was a big super spreader event. That starts again today.
And it was, I think, the Liverpool
Champions League match, wasn't it, against Atletico Madrid?
That's it, yeah. And that
all the people from Madrid came over and spread it because it was rife there at the time, wasn't it?
Yeah. So it's, cool. A year ago, wouldn't have believed it.
No, you wouldn't have, would you?
How the mighty have fallen.
Yeah. I mean, what Liverpool are you talking about?
Yeah.
I mean, an area that hasn't fallen clearly is stocks, and there are a couple of areas of the market that remain highly speculative and continue to push higher. These so-called blank check companies or special purpose acquisition companies, which are basically cash shells. People are sort of falling over themselves to try and get behind these things. The idea, obviously, that new companies go on to make acquisitions, and they're targeting sort of consumer, fintech, and green metals sectors. And also, we've got obviously the meme stocks, which have been pushing higher. And yesterday, we had the announcement that eToro, a big player in the financial trading space, is close to a public listing, which will be a $10 billion. $10 billion, which is massive.
Yeah, that's a lot, isn't it?
It is
a lot.
Yeah. And then we've got oil prices. They dipped lower yesterday. They were weighed down by a stronger US dollar, with technical indicators suggesting there's oversupply in the market. Lots also going on elsewhere in the oil sector. The appetite for American oil is diminishing, and that's obviously as oil prices are up at the highs that they're at, which makes it obviously a good time for them to try and get it out the ground. So yeah, it's a little bit odd, but we'll come on to that shortly, unless you want to jump straight into that, or if there's other areas of the markets that you wanted to focus on first.
Yeah, I can have a look at oil straight away. Yeah. As you say, there's sort of like this, if we look, well, looking at the weekly on a technical perspective, that doesn't look great last week. That's a hanging man candle, and even the week before, although it's bullish, we did see this slight sell-off into the middle of the week, and then the rally back and closed really strongly. But then last week is a hanging man candle, so be aware of that, especially for, you know, we look at the longer term charts to give us good guidance. And that looks negative. And as we can see, this looks like a bit of a ABC correction at the end of maybe wave 5 or whatever it may be. We're still in this bullish channel, but we've hit some really, really good significant levels. Looking back on the charts, this was the swing highs from April 19 and January 20. And we've had I mean, look at that move. That's like parabolic in any terms. On a weekly chart, you know, it's almost doubled in price, oil, in the last, well, since November. I mean, that's incredible. Obviously, the economy opening up, but then you've got sort of like, will the demand be there? These prices are sort of like, you know, heavily manipulated in a way, because you have the OPEC nations, OPEC plus nations. It's within their interest to have higher oil prices, and so I just feel it's a little bit overdone. It could do with a, you know, decent correction, but I don't know, you know, how decent it will be. Will it be decent enough to sort of like go to the pump and notice a difference? I don't know. Every time the price of oil rallies, you sort of see the prices jump at the gas stations, but when it comes off, the prices don't seem to sort of come off as aggressively, funny enough.
There's definitely a lag there, isn't there?
Yeah, a massive lag. And by the time we sort of like we sort of like start to see that little benefit, the prices start going up again on the underlying. But anyway, it's enough conspiracy on that. Yeah, the sort of like the levels to watch, really. 60, well, around about the previous swing high here. That comes in at 63.70, and we did get down to 63.10. So that sort of range will be a 50% retracement. And as we say, I quite like to look for, you know, normal corrections would be AB equals CD. That sort of like could take us down towards the $62 mark. And again, there'll be significant support around here, all the way down to just above $59. So any sort of correction wouldn't be necessarily bearish. Looking at over the more medium term, it's just common correctives. You have these corrective sequences, and again, would it be sort of setting up more of a head and shoulders formation? Don't know about that yet, but yeah, weekly chart well overdone. Looking at gold, this is perking up a little bit, gold, and dollar sort of like did perk up a little bit yesterday, and we saw gold sell off, then rally higher, then it sold off again. And this morning, if we look at the hourly chart this morning, we posted a bullish hammer again. So I wouldn't be surprised if my gun to the head sort of trade sort of like takes that into account and tries to look for this extension higher. Definitely sort of like looking at the 1738, 1740 level as a sort of like, if we break above there, we should see an extension higher as well, maybe more accelerated move. On silver, silver seems to be just following gold at the moment, as per normal, I suppose. Bullish hammer posted in the last hour. Again, can we see it extending higher on the daily chart? Again, we sort of like, we're looking at an ABC correction from the sell-off lower. Momentum definitely building higher, so slightly positive on silver. And what's copper doing? Copper's sort of like in this, I don't know, is it like a flag formation? It seems to be sort of like just playing with us at the moment, copper. I think that's, you know, there's potential for that to have an extension higher as well. So I suppose all comes down to, you know, the dollar maybe. If we don't get any other input into their markets, the dollar will be the one that will be guiding those along. And as Joe's rightly pointing out, looks like a bit of a bottoming formation. Pretty decent performance over the last couple of days, and hasn't had a bad start this morning. Break above the 92 level, and we should see maybe a retest of this 92.50 wouldn't be a surprise at all. On the indices, again, a daily chart, bit of a grind higher in FTSE, hanging man candle from yesterday. Wouldn't read too much into it, but there is this level at 68.11 that we're really struggling to break. We've tested it on 1, 2, 3, 4 occasions, and as we said yesterday, a break there opens up a move towards the 69.60 level, which was the swing high from this year. DAX, again, looking quite positive, although struggling a little bit at these higher levels. I think you go with the flow above it, 14,600 opens up. That there's plenty of room on the upside. So wouldn't be standing in the way of that. Again, a little bit of a flag formation possibly forming with the price action going on. Dow Jones all-time highs, shock horror, getting towards the 33,000 level. Again, hanging man candle, so be aware of those. The Nasdaq not performing as well. Again, I think if I just take this head and shoulders formation out, there's still potential for a more complex head and shoulders, although we did break the neckline, have a bit of an effort down, wasn't good enough. Let's get rid of that. And really only looking forward or looking across, we can sort of see that 12,438 offers pretty decent support all the way down to 12,200 in the Nasdaq. It just doesn't feel like that it's got enough in it on the tech side of things to have to push higher. But we've been sucked in by that before, so I wouldn't get too carried away again. S&P all-time highs today. Still looking at this 40,000 level as the psychological level to target. This ending wedge, we had a breakout and closed below it, but we soon jumped back into it and we're pushing higher. Trending resistance, upward trending resistance comes in around about 40.30. So yeah, potential for the upside on there as well. So that's about it on the indices, and of worth.
Thank you, Steve. Okay, let's have a quick look at the FX side of things. You touched upon the dollar index there, and that remains the sort of key market, I think, to watch. Overall, we've got these baskets of currency indices that I look at each morning, and yesterday it was a case of dollar strength yet again, pushing higher, but we're also seeing a bit of strength down here on the Swiss currency pairs, which are arguably pushing a little bit higher, maybe forming a bit of a bottom. Not the case with Japanese yen, however, that has made a new low on the currency index. The pound is getting a bit of a smashing today. I don't know if there's been any information out on that, Steve. I don't know if you'd
I'll have a look.
mind having a quick flick while I continue to chat. But yeah, that's not looking particularly healthy. Elsewhere, we've got New Zealand dollar and Australian dollar all both sort of hanging around. But dollar index is really where it's at. So I'm just going to take a deeper dive into that today. So first up, we've got the daily chart on the dollar index, and we keep talking about this potential for a bottom pattern having formed here. Broke above the 91.60 level, decentish looking pullback, and then a break higher, maybe in a bit of a flag sort of pattern. Looking decent today. I fancy it to at least get back up to this 92.50 level. And if we can break above that, then we're looking at targets quite a bit higher, up at sort of 94, up to 94.50, and that would be a decent correction following the pretty nasty sell-off that we've seen in the dollar index since the March highs that we saw. Looking elsewhere at some other pairs, let's have a look at Aussie. So potential for a top pattern to be taking shape here, and obviously that would mean dollar strength. So keep an eye on this. We saw a break of this trend channel here. We saw a retest of it, arguably up around here. This is a pattern I've drawn on quite speculatively at this stage because, of course, head and shoulders patterns aren't complete until we break the neckline, and I've got the neckline sloping higher, but I would prefer to see a break of that to really confirm it at 76.21. So keeping an eye on that one today. We are seeing some weakness there on that pair. If we look at euro dollar, again, it's the flip of the dollar index chart. We've seen a break of the trend channel here. We've seen a nice retest of the underside of the channel once it broke. We then saw a breakdown of the support here at 1948, and then a bit of a retest. So thinking that the momentum remains bearish and further downside can be expected down to this kind of region here, which is a 200-point region between 114.92 to 116.95. So that's what I'm looking for on euro dollar. If we look at cable, as I mentioned just a moment ago, that was getting a bit of a smashing in today, along with the rest of the sterling pairs. Any news, Steve?
Yeah, at 6:20, we've sort of got a headline from Reuters. Bank of England's Bailey sees 12% fall in UK GDP in Q1 with respect to 2019, down 4% with respect to 2020. The banks will continue to buy government bonds in 2021, although negative yields will penalise private investments. And on business savings, UK inflation will remain below 2% inflation threshold, but will initially flare in the short term due to public support measures. So pretty negative comments coming out from Bank of England's Bailey. They're in the paper this morning. That came via Reuters.
Okay, great, thank you. So we are trading in this bullish channel at the moment, and what we saw a few days back was a break of this wedge, which would have signalled in normal circumstances potentially a continuation higher, certainly up to retest these highs that we posted at 42.40. But we are heading lower today, and we're going to be facing a key test potentially of the lower end of this channel, which comes in today at around about 37.60. So keeping a keen eye on that level. If that breaks and we see a clean break of this channel, then we can expect New Zealand yen looking pretty stable still. Yen not really showing any signs of turning into a safe haven asset anytime soon. If we look here at dollar CAD, we've seen some support come in at 24.68, so quite a key level there. Really interesting doji level posted bang on that low from the 25th of February, and then followed up today with a bit of buying. So maybe we'll see a bit of a correction higher in that. And then we'll have a look at dollar yen again. So yen's not coming to the party whatsoever, but it is still trapped below this big trend line here, following this pretty sharp move higher. So has it got enough legs to break this out with any conviction and continue higher? I'm not entirely sure still.
Definitely stalling there, isn't it?
Yeah, so keeping a very close eye on this still. I have been trying to sell that on the gun to the head trade ideas for the last few, over the last week or so, but yeah, keeping an eye on that one for now still. So it pretty much wraps it up from what I'm looking at on that perspective. So I'll flip over to the gun to the head trades from yesterday, and what did we do yesterday? So you had a winner, Steve. I know that much.
Winner, chicken dinner
on gold.
Yeah, a little bit of winner on gold, only small.
So as I mentioned yesterday, I had a look at dollar yen. It was 12 ticks offside, didn't get stopped out, but 0.39R offside. And Steve, you were 0.27R onside on gold, so partially offsetting some of the losses that were seen on my trade. So lost a small amount of money yesterday, nothing massive. So we go again today. Have you got anything that you like the looks of this morning?
I think I'm going to stick with the gold idea. Coming in here at, it's a little bit higher than when we got in yesterday, 1731.50. Stop, I'll put it as 1722.50. Is that? Yeah, it's right on the border of where I'd prefer to get long, but we'll stick it there. And the target is just under $1,750. 1749.50. Yeah, I'm going to stick with it. 2-to-1 risk reward. Just got a little bit of a feeling that we're going to sort of like get this extension higher in gold. If we break the 1740 resistance, should get flush out a few stops and extend higher from there. Also, I did see just a bit of the news. UK FCA starts criminal proceedings against NatWest. Ooh, not good.
No. Okay, thanks, Steve. I'm going to take a look at Euro Swiss. Very boring market typically, but as you can see here on the hourly chart, you could say there's maybe a bit of a range ongoing. at the moment. And just in the last few hours or so, we posted this candle here at 7 a.m. today, which was a bullish outside candle. We posted a new low below the lows here, but then closed on new highs and above the 10-period exponential moving average. We've also got maybe a bit of bullish divergence down here. Again, this is all super speculative and it's very intraday, in time frame. So let's see if we can get something out of this. It's currently 1.1066. I'm going to target and move up to these highs around here at 1.1110 and have a stop loss at 1.1048. So looking for 2.8R on that trade today.
Cool.
Okay, news-wise, today we've got German ZEW at 10 a.m. The economic sentiment is expected to rise to 75 from 71.2 a month previous. So keep an eye on your euro exposure at that point. And then at 12:30 today, we've got US retail sales forecast to fall 0.6% month on month from a 5.3% rise in January. So that will have an impact potentially on the indices and anything related to US dollar. So that's at 12:30 today. Normally these numbers come out at 1:30. That's because the clocks have changed in the US. They often do it, well, they always do it a couple of weeks before we do. So make sure you don't get caught out by that later on today as well.
Yeah,
Anything from you, Steve?
A couple of 2-year bond issues today, which might not sound significant for the UK really, but if you're looking for a bargain, you can grab a 0.07% 2-year bond from the UK government today at 10 o'clock. I'm sure they'll be queuing around the block for that.
Obviously, well, you know what? If the demand is a little bit higher than normal, then that may set off some alarm bells because it means that people are shifting to these riskier assets in search of, risk-free gains rather than chasing the stock market.
Yeah, possibly.
We had that 10-year bond auction in the US last week, which wasn't particularly well subscribed. There were fears that it may have been.
Well, you've got the UK issuing 2-year bonds, and you've got Germany selling 2-year bonds as well.
The rates in Europe are terrible, aren't they, compared to the US?
Yeah, it's negative 0.73% the average yield. They're looking for.
I can't imagine there'd be much demand for that then.
Well, that's it. It's sort of like with inflation, you're sort of looking at paying, potentially, 2.5% away, just to sort of have a safe place for your money.
Just to own it.
Yeah, weird. Didn't expect that.
No. Okay, well, let's wrap it up there for the day then. Best of luck, everybody, and we'll be back tomorrow morning.
Cheers, mate.
Cheers, then. Bye-bye.
Bye.